us today to chat about the interesting investment plays in these volatile times. We have with us Phillip Hagedorn. He's the CIO of ATRAM. Good morning, Phillip, and welcome back.
Hey, Danie. Good morning. Thanks for having me today.
Phillip, let's take a step back and just discuss offshore sentiment and also, let's say, domestic sentiment. After we've seen a slew of economic figures here, remittances continuing with that uptrend. You've got manufacturing data still on the expansion mode, but you still have exports disappointing. You've got the weakening peso and the oil story here, plus the Fitch downgraded outlook. How is this all, is there sort of net effect here? Which side is this veering towards, optimism or more pessimism?
Well, first of all, I think we have to be happy that we're at 6,800, not at 6,000, right? So, you asked first on the foreign sentiment. It's obviously still generally been negative, but last month, we saw inflows. I think at the end of the month, it still recorded a slight outflow. But, the Mondanisan IPO, for example, attracted quite a bit of interest in the Philippines. And I think it also opened the eyes to foreign investors to other blue chips that were still looking quite attractive and still are looking quite attractive today. I think the foreign investors will come. There is concern. We have an election coming up. They want to see what policy will be looking like, which is still going to take a while to understand because we have no idea, who's going to win. And obviously, we have a health crisis that we're still battling with. At least from our point of view, this third quarter is going to be critical for us in the battle against the health crisis because this is when we do expect to see the inflow of vaccines and the ramping up of vaccinations across the country and opening up. We are opening up the economy. We can see the mobility numbers are much higher. Well, they're back to where they were, a little bit even higher than where they were in the first quarter with that recovery. So I think, there's reason to continue to be optimistic. The downgrades that we've heard about are not surprising. I think we started to hear downgrades as early as March. As a matter of fact, we downgraded in March because of that health spike happening and the anticipated lockdown. But our downgrade is right around where folks are talking about today, 5 to 6% GDP growth. The second quarter is going to be interesting because hopefully we'll be finally out of this negative GDP growth trend that we've seen with this second quarter. Those results should be out in the next few weeks. Lots of bits of news that are going to be coming out to be able to dictate a little bit of what the direction will be in the second half. And I'm still optimistic that we're going to see some fairly good numbers on GDP. We're looking at growth for sure. I've seen forecasts from 5 to as high as 8% for Q2. Obviously, that was coming from a minus 17 number, so we should see some growth, I hope. Earnings are on track after the first quarter. We will start to see earnings results come out very soon. I think the banks will be the first to report. And everybody's worried about those NPLs, right? I'm not too worried, actually. It seems like the banks have things under control. They're going to be higher, 4, maybe 5%. They were talking about 9% last year, and now they're talking about 6%. So things are starting to be able to be clear, and maybe the support the BSP is given, the banks are at least the large ones. I can't speak for every single one. Will seem to manage this crisis quite well, manage through it quite well. So, yeah, we're consolidating. Yes, there's a negative Fitch study, but to me, again, you have to look at the peso. The peso started to move well before Fitch came out with this outlook, and I think it has something to do with, again, normalization. We should not have been at 47.
Okay.
We probably won't be above 51, but The 50 level, probably the fair level of where the peso would be, and maybe that will attract foreign investors because they didn't want to buy into this market only to get hammered by the currency on the first month. You know what I mean? So if we're at 50, maybe more reasonable for them. The market is 6,800 and it's at 50. It's better than buying at 6,800 at 47 and then losing whatever 9% or 8% in the currency, right? So
Philip, do you have any better visibility on the corporate earnings moving forward? What is your expectation for the second quarter? And with all of these things, can you actually say that the stimulus of the government, the reopening of the economy now has a concrete impact on the bottom line, and we will be seeing that, and that's going to improve the valuations moving forward?
well, we're hoping to see that. I mean, that's what we want to see, that there's continued improvement from the first quarter. It's tricky because you did have that lockdown in between, right? So that's why the downgrades. But even the downgrades, I haven't seen a downgrade that doesn't give you positive growth in Q2 this year. So hopefully we can turn that corner, and I'm confident we will. Now, with the earnings recovery, we also downgraded our earnings recovery. Initially, in the beginning of the year, we thought we'd see earnings grow closer to 40% for the PSEI as a whole on a weighted basis. We downgraded to 30%, and it hit that number in Q1. We expect to hit it in Q2. Hints, we don't have more hints than the general public will have.
Yeah.
If you watch the market and you look at who's doing buybacks and how aggressive some of these buybacks have been in the second quarter, coming from the companies themselves who actually know what's going on, that's a hint.
Your indication.
I'll
How would that
leave
be
it to
your year-end target? So this 30% growth, what it would be your year-end?
Well, fair value we think is around 7,500, right? That one, when you look at the index, if you put a PE multiple of 17, 18 times on it, 7,400 should be the target. But what's more interesting is that next year's EPS growth, in our view, is expected to be 30%.
Okay.
So not only is it 1 year that we're looking at, but we're looking at 2 years of consecutive strong earnings growth. And then that means that the index is only trading at around 14 times, I think, next year's earnings. And we're already in the second half of 2021, right? So 2-3 months, investors are already positioning for next year. And I think there's no reason not to be confident about continuous progression and continuous opening up, as long as we can manage the health crisis. That's still the number one challenge. Get vaccinated, get as many people vaccinated as possible, continue to open up the economy, and we should be okay.
Are you happy though with given all of these issues, with the activity that we've seen, nevertheless, with domestic investors when it comes to listings on the bourse, trading volumes? Even we've been in shortened
Yeah, I
trading
mean, it's
so
been a
long.
fantastic, this has been a game-changing experience these last 18 months or whatever it's been. The retail market has grown. The number of investors in the Philippines locally have certainly grown. I think the data is showing that close to 70% of daily turnover is local,
Right.
right? This market would not be at 6,800 without the local investor. And the local investor is a force. It's a strong force. People thought the Nissan IPO would not be well taken because it was too big, etc. It's performed very well considering the size. I think there's an IPO pipeline that's looking very interesting. And, maybe this could be the time for us to finally get this show on the road, as they say.
Okay, so as you mentioned here, despite all of these moving parts, and as you mentioned, containing the health crisis, you do see, some buybacks happening. So there must be some much, optimism that we
Take
don't
the
know.
hint. Take the hint from the owners of the companies.
that still believe in the medium to long term prospects of their companies. So let's keep it at that, and hopefully like that sentiment will be spilling over into the markets. Thank you so much, Phillip Hagedorn, CIO of ATRAM.
Cheers. Thank you, Danny, for having me.